November 1923. A German woman burns paper money in her stove. Not because she's wealthy, because the money is worth less than the firewood it replaced. 1 kilogram of bread costs 200 billion marks. A single egg costs 80 billion. Workers are paid twice per day because by afternoon their morning wages are worthless. Children play with stacks of banknotes in the street, building towers from what used to represent years of savings. This isn't a horror story. It's a warning. And the exact same pattern that destroyed the Weimar Republic's currency is happening right now to the US dollar. But here's what almost nobody understands. The people who survived Weimar with their wealth intact did one thing. They stopped holding currency and bought hard assets. Gold, property, foreign money, anything that couldn't be printed. Today, that asset is Bitcoin. And if you understand what's coming, the $500,000 price target isn't speculation. It's mathematics. Let's go back to 1914. Germany is a superpower. The Deutschmark is respected globally. Berlin rivals London as a financial center. German industry leads the world in chemicals, steel, and engineering. The currency is backed by gold. Inflation is low. Savings are safe. Then World War I begins. Wars are expensive, catastrophically expensive. Germany needs to pay millions of soldiers, build weapons, transport supplies across Europe. The government has 3 options. Raise taxes, which is politically suicidal during wartime. Borrow money, which they do, selling war bonds to citizens. Or print money. They choose all 3, but printing becomes the easiest. The Reichsbank starts creating marks out of thin air to fund the war effort. At first it's manageable. Inflation rises from 2% to 10%, but people accept it as the cost of war. Germany expects to win, seize territories, extract reparations from enemies, and pay everything back, but Germany loses. November 1918, the armistice is signed. Germany is defeated, humiliated, and about to be destroyed economically. The Treaty of Versailles in 1919 demands reparations. Germany must pay the equivalent of $300 billion in today's money to France, Britain, and Belgium. This is more than Germany's entire GDP. It's an impossible sum designed to cripple Germany permanently. The Allies want revenge, not reconstruction. German diplomats sign under protest, knowing the terms will devastate their country. But the reparations must be paid in gold or foreign currency, not marks. Germany doesn't have enough gold. They don't have enough foreign currency. So they do the only thing they can. They print marks, use them to buy foreign currency on the international market, and send that currency to the Allies. Every time they print money to buy dollars or francs, the value of the mark drops. As the mark drops, they need to print even more to buy the same amount of foreign currency. It's a death spiral. By 1921, inflation is 50% per year. By 1922, it's 5,000%. By 1923, it's hyperinflation. Prices double every few days. A loaf of bread that cost 1 mark in 1914 costs 200 billion marks in November 1923. Money becomes meaningless. People are paid in wheelbarrows full of cash. They rush to spend it immediately because by tomorrow it will be worth half as much. Let me give you a specific example. A German pensioner who had saved 100,000 marks over his lifetime, enough to live comfortably for 20 years, watches his savings become worthless. In January 1923, his savings could buy a small house. By November, they can't buy a loaf of bread. 60 years of work, gone. Millions of Germans experience this. The middle class is annihilated. Savings, pensions, insurance policies, bonds, anything denominated in marks evaporates. But not everyone is destroyed. Some people see it coming. They convert marks into tangible assets. Land, buildings, gold, foreign currency, businesses. The wealthy, who own factories and real estate, survive. In fact, they thrive because their debts are denominated in marks and become worthless. You borrowed 1,000,000 marks to buy a factory in 1920. By 1923, you can pay off that loan with pocket change. The inflation transfers wealth from savers to debtors, from workers to owners, from the poor to the rich. There's one other group that survives, the people holding foreign currency, specifically US dollars. Because while the mark is collapsing, the dollar is stable. Germans who bought dollars in 1920 and held them preserved their wealth. When the mark finally stabilized in 1924, those dollars could buy German assets at 99% discounts. Entire city blocks sold for the equivalent of a few $100s. Hyperinflation wipes out the middle class and consolidates power in the hands of those who saw it coming. Now, 2025. The United States is running a fiscal deficit of nearly $2 trillion per year. The national debt is $36 trillion and growing. Interest payments on the debt exceed defense spending. Social Security and Medicare are underfunded by tens of trillions. The Federal Reserve printed $5 trillion during COVID, another $2 trillion during the banking crisis in 2023. Money supply has increased 40% in 5 years. Every economist will tell you this isn't Weimar. The dollar is the global reserve currency. The U.S. economy is enormous and productive. We have the rule of law, strong institutions, and the most powerful military. Inflation is 6%, not 6,000. We're fine. But let's look at the pattern. Weimar started with war debt. America has war debt. 2 decades in Afghanistan and Iraq. Trillions spent. Nothing gained. Then Weimar had structural obligations they couldn't fund. America has Social Security and Medicare, which are Ponzi schemes mathematically. 10,000 baby boomers retire every day. Each one expects decades of benefits funded by a shrinking workforce. The trust funds are projected to run dry by 2033. When that happens, benefits get cut 40% or taxes double. Neither is politically possible. So what happens? They print. Weimar had reparations payable in foreign currency, forcing them to print and debase. America has a different problem. The world is slowly abandoning the dollar. China is settling oil trades in yuan. Saudi Arabia is accepting yuan for oil. The BRICS nations are building alternative payment systems. 40% of Russia's trade is now in non-dollar currencies. The dollar's share of global reserves has dropped from 71% in 1999 to 58% today. That trend is accelerating. Here's why that matters. America can run massive deficits because the world needs dollars for trade. They buy treasury bonds, which finances our spending. But if the world stops needing dollars, demand for treasury bonds collapses. If demand collapses, interest rates spike. If interest rates spike, debt payments explode. If debt payments explode, the government has 2 choices. Default on obligations or print money to pay them. They'll print. They always print. When they print, the dollar loses value. When the dollar loses value, inflation rises. When inflation rises, people panic and try to preserve wealth by buying assets. When everyone buys assets simultaneously, asset prices explode and currency collapses faster. It's a feedback loop, exactly like Weimar. The timeline is different. Weimar collapsed in 4 years. The dollar has been losing purchasing power for 50 years, ever since Nixon ended gold backing in 1971. A dollar today buys what 7 cents bought in 1971. That's slow motion hyperinflation. But slow motion can accelerate. If the world suddenly dumps treasury bonds, if the dollar loses reserve status abruptly, the process that took Weimar 4 years could happen to America in 4 months. This is where Bitcoin becomes relevant. In Weimar Germany, people who survived held gold and foreign currency, assets that couldn't be printed by the Reichsbank. Today, gold still works. Central banks are buying gold at record rates. They see what's coming. But Bitcoin is the modern evolution. Bitcoin is capped at 21 million coins. No government can print more. No central bank can inflate it. It's digital, so you can move it across borders instantly without confiscation. It's decentralized, so no single entity controls it. It's the first asset in human history that combines the scarcity of gold with the portability of currency and the security of cryptography. When Weimar collapsed, the mark went from 4 marks per dollar to 4 trillion marks per dollar. If the dollar follows a similar trajectory against Bitcoin, you get the $500,000 price target. But let's be more conservative. Let's say the dollar loses 90% of its value over the next decade. Bitcoin is currently around $60,000. If the dollar loses 90% of its purchasing power, Bitcoin doesn't need to do anything except maintain value relative to real goods. It's the dollar falling, not Bitcoin rising. But in dollar terms, Bitcoin would be worth $600,000. Here's the mechanism. As inflation rises, people move wealth from currency to scarce assets. Real estate, stocks, gold, Bitcoin. As more money chases scarce assets, prices rise. Bitcoin, being the scarcest digital asset with the easiest global access, absorbs disproportionate capital. Institutional investors, who manage trillions, are beginning to allocate 1 to 5% of portfolios to Bitcoin. When pension funds, sovereign wealth funds, and central banks join, the buying pressure becomes unstoppable. We're already seeing it. In 2020, Bitcoin was $7,000. By 2021, it hit $69,000. It crashed to $16,000 in 2022 during the rate hikes, but by early 2025, it's back above $60,000. This isn't speculation. This is smart money positioning for inflation. Let me tell you what happens next. Over the next 5 years, the U.S. government will face a fiscal crisis. Bond markets will demand higher interest rates to compensate for inflation risk. The Fed will be forced to choose between crushing the economy with high rates or printing money to buy bonds themselves. They'll choose printing. Inflation will accelerate. 10%, 20%, possibly more. Average people will see grocery prices double. Rent will skyrocket. Wages won't keep up. Savings accounts will lose value in real terms even with interest. The middle class, like in Weimar, will be quietly destroyed. Not through dramatic collapse, but through silent erosion. Your salary stays the same, but everything costs twice as much. That's wealth destruction. The people who survive will be those holding scarce assets: Bitcoin, gold, real estate in stable areas, productive businesses, anything that can't be printed or debased. If you're holding dollars, you're holding Weimar marks. You just don't know it yet. This isn't financial advice. This is historical pattern recognition. Weimar happened because a government printed money to meet unpayable obligations. America is doing the same thing. Weimar destroyed the middle class and empowered those who held hard assets. America will do the same. Weimar ended in political chaos, extremism, and eventually war. We know how that story ended. The Weimar survivors weren't lucky. They were informed. They understood monetary history. They knew that governments always choose inflation over default, because inflation is a hidden tax that spreads pain slowly while default is immediate and visible. They converted paper wealth into real wealth before the collapse became obvious. You're watching this video because some part of you senses something is wrong. Prices are rising, wages are stagnant, the government is spending trillions with no plan to repay. The experts say it's fine, just like they did in Weimar, just like they did in Venezuela, just like they did in Zimbabwe. And they were wrong every time. Bitcoin at $500,000 isn't a bull case, it's a survival case. It's what happens when the dollar loses its credibility and people flee to the only asset that can't be controlled, confiscated, or inflated away. The Weimar Germans who held foreign currency didn't get rich. They just didn't get wiped out. That's the goal. Don't get wiped out. The pattern is clear. The timeline is accelerating. And history says you have less time than you think. In Weimar, the final collapse from high inflation to hyperinflation took 6 months. One day, bread cost 100 marks. 6 months later, 200 billion. The window to act closes fast. You've been warned.